So how do I qualify to buy a house? Well, the first thing you need to do is talk to a loan officer like myself, and you can either go to a bank or you can go to a broker. And I truly believe that brokers are better because, for one, we're more highly regulated, so you know exactly what you're getting. We tend to work a lot faster and get the loan done earlier, and we have a lot of different lenders that we work with and can better match them to your situation. So at our first meeting, we're going to talk about your goals, what you're trying to accomplish, and we're going to talk about three main things. So your credit, your income, and the funds that you have available for down payment and closing costs. Those are the three main things we need to qualify for a home loan. So usually after that meeting, you're ready to do an online application. It takes usually about 15 minutes. You go to 719ryan.com. And what that does is it gives me the information and the permission to dig into the details of your situation and to, help decide where to go forward from there. So the first is your credit, otherwise known as your FICO score. A really interesting thing is that there's actually many different types of FICO scores. They're a little bit different whether you're getting an automobile loan or a new credit card. So the mortgage lending has their own formula for FICO. So it might not be exactly what you see at Credit Karma or what you think it might be. But the bottom line is that if you have a FICO score of at least 580, you can get a home loan. Conventional loans start when you get them a bit higher than that, starting at a 620. In my opinion, once you reach 700, then you have good credit and you get the absolute best home loans. So the way that this affects you is that it really costs you more money to buy the same amount of house with a lower credit score than a higher credit score. And it affects many different areas of your life. It affects your insurance rates, it affects your credit card rates. So it's always a good idea to try to be improving your credit as you move forward. A second thing that we need to look at is your income. You're really gonna need a full-time job, or one of the co-borrowers is gonna need a full-time job. So any part-time income doesn't count unless you have a 2-year history of receiving it. There's also some other caveats if you're self-employed, but you also typically need about a 2-year history. We look at something called your debt to income ratio, which means if you add up all of your debt payments for a month, that can include things like car payments, credit cards, student loans, child support, many other things, even including the new proposed mortgage payment. All of those things added together cannot be any more than 50% of your gross monthly income. So gross means before taxes. So if you're paid $4,500 before all the taxes are taken out from your paycheck, that's the number we're kind of looking at there. So income is a huge thing in being able to qualify for a loan. Do not buy that new car if you want to buy a home. So get into your home first, because that payment of that new car can easily make it so that you're not qualifying for your home loan. All right, so now let's talk about the down payment funds. So a great first-time home buyer loan is going to have 3% down. So if you're buying a $400,000 house, that's $12,000. And sometimes you need to put a little more than 3% down for a loan. Plus there's this stuff called closing costs. That's usually about $6,000 to $7,000 that you need to be prepared for. So that's stuff like, taxes and title insurance and different fees and recording things that need to happen to buy a loan or buy a home, But also, it also covers the new fund that's gonna be part of your mortgage that's gonna pay for your taxes and your insurance. So there are different first-time home buyer down payment assistance programs, but you gotta really understand that there's no such thing as a free lunch. So those things frequently have strings attached to them, either a higher interest rate, or they cap your debt to income ratio at a lower level. So if at all possible, it's good to either do it on your own or do it with family. So most people really want to do it on their own, and that is admirable. But I would say probably about 90% of the people who I put into a home, especially first-time home buyers, are getting some kind of assistance from their family. So gift funds are allowed to help with that down payment, to help with the closing costs. But bottom line is you do need to save your money, and it takes some money to get into a home. Besides gift funds, two other sources for down payment that are less considered are, one is a Roth IRA, which has a provision in there that you can use your funds in your Roth IRA and liquidate them for a down payment on your first house, and that's penalty free. But definitely talk to your accountant or financial planner before you do that. Or whole life insurance proceeds that have cash value is another possible source of down payment funds. Well, I hope this video gave you clarity on the things to look out for and the things to develop on your way to buying a house. If you're within about a year of buying, give me a call at 719-210-5517, and we can get started on the right path together.